Okay, good morning, ladies and gentlemen. Welcome to kickoff of 9th edition of Local Society CFA Research Challenge. My name is Krzysztof Jajuga, and I'm serving as organizer together with Monika Grabek. She's executive director of CFA Society Poland, as you probably know from the context. And I should also introduce the most important person today, Grzegorz Para, who is the manager of investors relations at company. You know what company is it? Of course, Cyfrowy Polsat. My great thanks goes to company for just deciding to be kind of subject of your research. And as I understand from previous years, your research is very thorough and is very critical about the company also. But I think that it will end with by recommendation, which is always the case. So that's my first statement. Thank you very much. My thanks also goes to the sponsor of our local challenge, Deloitte. Unfortunately, Mr. Grzegorz Ochrymowicz, who is the head of our contacts, he had to go for some business, but you will see him probably at the local final, which will be in March. So my main, how to say, task here is just to give you a short introduction to Research Challenge, and then I will, of course, pass the floor to our great guest here to describe the company, of course. So let's start. What is CFA Institute Research Challenge? I think it's global, of course. It used to have the name Global Investment Research Challenge, but a few years ago it was changed to CFA Research Challenge. It's organized by CFA Institute globally, but local societies are organizing this in the local level, of course, for the 12th time. Actually, the idea of this competition came from New York Society. Now it's called New York Society, but it was called New York Society of Securities Analysts. They changed the name recently, and they had been organizing this competition over many years. And sometime around 2006, CFA Institute asked them, maybe we could organize this in the global level, so maybe you could license this in competition to whole world, and that happened. And actually, as far as Poland is concerned, this is being organized for the 9th time. So we started in 2009, and final was in 2010. In last few years, we also include Lithuania and Latvia. I'm not sure whether Lithuanian delegation. Oh yeah, welcome to Poland. Lithuanian delegation is here as well. This time we don't have Latvia, but last year we had Latvia as well. So thank you for coming, and thank all of you for coming. This is, as you know, the competition between teams from universities. The rules allow for at most 2 teams for the competition. In some universities there are 2 teams and some 1. First stage, there's local competition. That's what we start now. Second stage is regional competition, which is on 3 different regions. EMEA, we are in the EMEA region, Europe, Middle East, and Africa. There are 2 others, of course, Americas plus Asia Pacific. And then we have global final, global competition, global final, which is usually 1 day after one of these regional competition takes place. Next year, which is in 2018, in April, the final is in Seoul, Korea. So it's in Asia, just after Asia Pacific competition. The numbers from last year, actually not this year, but final was in Prague at the end of April. You see the numbers, there are big numbers, so it's worldwide, and it's, I think, in my opinion, is the most prestigious student competition in the area of finance. I don't think there are any other competitions that are on such wide scale, whole world, and they are being recognized already by also employers and industry. Okay, I don't have numbers for this year, of course, yet, but this is coming very, very soon. You see, well, these are the small letters because there are so many universities. Of course, you'll get this presentation, so you'll recognize this all universities. We have 25 universities. I'm not sure they're all already registered, but it's coming in next days probably. And there are 32 teams. So you see there is big competition. It's overall record. Last year we had something like 22 or 21 teams from maybe 16 or 17 universities. Local competition is important that each team must have faculty advisor, and that's the person, very important person who build the team actually. I understand that you are, with the help of your faculty advisor, you are composed and then you are prepared, and your faculty advisor will work with you to some extent. Also each team, this is very important, will be assigned mentor. Mentor is coming from industry. This will be usually, almost always, the person with CFA charter. And we will assign these people in next few days, so you will get this information probably within 1 week with the person with whom you can work. And this is the basic idea, that even if you think that your report will be not the best one, but these contacts with mentors are very fruitful. So please do not hesitate to contact with them. Do not be shy. Do not think that, well, maybe my question will be stupid. There are no stupid questions, so don't worry. And you have to learn also participating in this competition. Timeline. So today we of course have kickoff, company presentation. The deadline for delivering a report is 18th of February 2018. So there is plenty of time. However, don't wait until the end of January with starting writing your report actually. This is a lot of work if you want to have it professional. Usually these reports, at least most of them, are very professional. You have to start, well, as soon as possible. Of course, there is a Christmas time. You're not going to price the company in Christmas and also New Year's Eve, but please do start as early as possible. And finally, the first half of March, I think this will be around the 10th of March. We don't know yet the exact day, because it depends also on the availability of the Warsaw Stock Exchange. Warsaw Stock Exchange is also our partner, and usually, I think always, these final competitions take place at the Warsaw Stock Exchange. The best teams will participate there. Also, for those of you who will be winning our teams, EMEA final is in Dublin. Usually it's done in such a way that on the first day there is some meeting and some explanation, etc. And the next day in the morning there are semi-finals. There will be usually something like 35 teams or something like this from EMEA region. So there are semi-finals in different groups, and the winners of the semi-finals will be announced at lunchtime on the 5th of April, and then in the evening there is final. There is local final, and finally you see there is global final in Seoul in April 20. This is just the presentation, not reports are graded, just final presentation. 4 teams usually. Usually there are 2 teams from Americas because they have more competitions. 1 team from EMEA and 1 team from Asia Pacific. Okay. What is important, please read official rules. I'm not going to refer to them now, but we are going to send them. Of course, they are also on the website of CFA Research Challenge, but we are going to send them. They are very important. You have to stick to these rules. If you have any doubts or any questions about them, please ask. No problem with. If we don't know the answer, we ask CFA Institute, of course, because there may be sometimes questions about this. So what I think is important, plagiarism is important. Do not copy report, because this is so important company that there are many reports about this company in different places. Please do not copy this, of course, because it's plagiarism and it will be punished, obviously. Please make your own choice. Okay, second one, registration. Those teams who didn't yet registered, we have to do it as soon as possible. There are newcomers to university, so CFA Institute had to create the name on the website and then you register. You have to do it, well, if you didn't do it yet, you have to do it almost immediately. Of course, if you read official rules, you will see what are requirements for team member, including registration. You also see who is ineligible to participate. So if you are CFA Institute member, you are not eligible to do it. Also, if you work in the company or if you are employed by the company, most students are employed already, but you're employed in the company and you do research, you do analysis, you are not eligible to start in this competition. So please check what's your status. Of course, this is all written in the official rules. And of course, we will have the idea is that we have one follow-up communication with the company. So we are going to facilitate this. Monica will help with this, but we thought that maybe if you can do it before the end of January, right? So you have to gather all questions, all problems, each team, and then you have to look what your advisor will tell about this and send this to us, and we will facilitate this communication with the company. So, okay. What else? Report. A report has to be written from the point of view of independent research analyst. No buy side, no sell side, some kind of independent. Secondly, of course, own research. Only industry mentors, faculty advisor are allowed to consult. And you have a rule here that your faculty advisor could spend with you up to 10 hours, and then industry mentor up to 6 hours. Of course, those teams or team who will go for the local, for the regional final, there will be additional hours that can be spent before, of course, but you know, these are rules and you have to follow these rules. So basically this is it as far as introduction is concerned. Of course, you're welcome to ask any questions in meantime, but now with undue delay, I would like Mr. Grzegorz just to give presentation of the company. So now you are investors. This is roadshow, right? and let's go. So the floor is yours.
Thank you very much, Mr. Professor. Actually, it's my pleasure to host you here and to say a few words about this company. First of all, maybe about this plagiarism. Actually, you won't have an easy challenge because actually there is no report currently on the market that will be describing Polsat Group as of the situation that we are today. Yes, that we have just announced a new transaction, acquisition of Netia company. So none of the sell side analysts have so far done any analysis on that, fully comprehensive and with full data, with full physics. So actually, you are challenged by them as well, and we are happy to see you in this situation. Naturally, we'll be looking which one will be better. Secondly, actually, I need to say a word from the management team who was supposed to run this presentation today. I need to say sorry that they were unable. Actually, it's 9 time London time, so actually they are right now starting presenting the same slides to our London-based investors. That's why they can't be here. Yeah, we had to split our team, and actually that's it. Maybe just a few words about myself. I'm working for this group of companies for 15 years already, so pretty long. Actually, my background is from telco part, from Polkomtel, from Plus Network. I've been working there for 9 years in the controlling, so I understood this business, this sector from the very bottom, from the foundation, and from the how the market structure, how it has grown to this shape. When Polkomtel has joined Polsat Group in 2011, actually informally, because in 2011 it was bought by Mr. Solos, I have been offered this job as investor relations from Polkomtel side. I mean, we haven't been publicly listed. Nevertheless, we have had almost 4 billion of listed debt. I mean, the bonds. And that's why the Polkomtel was running its investor relations activities. And right now, after Polkomtel has joined Cyfrowy Polsat, I have also joined this investor relations team of Cyfrowy Polsat, and I'm actually working with people comparable to you. I mean, I'm working mostly with the sell-side analysts. I'm working with the rating agencies, and also I'm having a meeting with the buy-side investors. The structure of the presentation that we have today was actually following what's happening in our company, because you need to be aware that whatever data, whatever reports, whatever information you find on our group in the public domain currently, it all refers to either yesterday or today. That's all, yes? One week ago, on Monday, we have announced a new transaction of acquiring another telco company called Netia, which is the second biggest fixed line infrastructure operator here in Poland. And as mentioned, this transaction won't be reflected in our data. You won't see it in our financials. You won't see it in the consensus. So you shouldn't be expecting that the consensus that you will see in Bloomberg or whatever source will be reflecting that. Absolutely not. This is absolutely fresh and needs to be somehow evaluated. And in the fourth point, we will look at our disclosure, at our regular report, just to give you a few words how to read them, how to understand them. So starting from yesterday section, actually, first of all, we'll say a few words about our group, about the history, about the strategy, about the assets, about the brands, etc. You will be valuing Cyfrowy Polsat, but actually we prefer calling ourselves a Polsat group, because this company is constructed of these 4 major pillars that has been presented here. First of all, TV Polsat. I think everybody who's Polish knows the brand, yes, because this is the first private television in Poland that has just had 25th anniversary a few days ago. It's producing 24 channels. 4 of them are broadcasted in free-to-air model, so every Pole in Poland can watch them. The business model is based on advertising revenues. Another 20 channels are distributed in a paid platforms, cable, satellite, internet, television. Secondly, we've got Cyfrowy Polsat with 3.5 million households with the television provided by Cyfrowy Polsat in a satellite technology. 3.5 million means actually Cyfrowy Polsat is the biggest pay TV television in Poland, and actually it's maybe among 3 or 4 biggest pay TV platforms in Europe. Yep.
So will we have access to this presentation?
Definitely. It's all public. It has been sent to the organization, so you will receive all of this data, yes? Cyfrowy Polsat, if I just want to comment, this platform was positioned as a value for money offering, yes? So it was intended to be the product for every average Pole, regardless of his pocket. It should be affordable for everybody and provide the entertainment for each family member. And that was actually source of success of this company. Then we've got Polkomtel Plus brand, one of the biggest Polish mobile operators, originated in 1996, so actually over 20 years of history currently. The company is currently providing 9.5 million voice services, understood as smartphones, as feature phones, etc., and approximately 2 million mobile broadband accesses to the customers. What Polkomtel is associated with or known for is actually excelling in investments in the newest technologies. Yes, so we have been proud to be the first operator providing edge UMTS and HSPA plus technology. Together with Polsat Group, as presented later, we have been also the first operator introducing LTE to Poland, and based on that's the source of our success. And the fourth part. That's definitely the smallest one. So it's not about money. It's rather about future. This is our we call it foot in the door to online television. So actually, we are looking at the trends. We are absolutely understanding that people are right now more and more interested in watching whatever they want, whenever they want, whatever device they want. So it lies it's our investment in this future technologies, and just the offer for I would say for younger, bigger cities customers. If we look at the history, this is actually the slide how the group has grown to the scale that we have today. Actually, recently we have had one of the I think Forbes has done such a survey, and Cyfrowy Polsat, so Polsat Group was calculated as the most valuable Polish private company, based on these assets that have been built over this period. As mentioned, the very beginning was TV Polsat, launched in 1992, free-to-air television. Then next step was pay TV, launched in 2003, and entering Warsaw Stock Exchange in 2008. Another important step, actually, because these 2 assets, they are both media related, yes? When Mr. Solar started thinking about going into telco business, it was actually 2007 with a company, a group of companies under Midas brand. This was the moment when the Polish market was actually, the regulators of the market were looking for more competition, for better pricing of products for the customers, and that was the perfect time actually to invest into this sector. And in 2007, Midas company started acquiring frequencies. Frequencies is something which is absolutely crucial for telco business, for mobile telco business. Based on these frequencies, they were actually, the content already existed, the frequencies were already in the group. In 2010, Midas was the first Polish operator offering LTE services, something which is a standard today, but actually in 2010 nobody knew what LTE is and whether it will pay off. What was missing was actually the larger customer base and the infrastructure. And that was all about Polkomtel, acquired in 2011 and joining Polsat Group in 2014. Later on, we have some other investments, smaller one like mobile TV, IPLA in 2012. And in 2016, Midas has joined the group. So we can claim that over this 10 years, starting from 2007 to 2016, we have finalized our project of building a fully equipped TMT company with all assets under one roof, with all technologies that we require. Actually, this slide was created a year ago, and back then we still didn't know that Netia is the next step that will be appearing here next year. Control of the assets, it's actually the philosophy of this group. Yes, we believe that if you want to be a successful operator, if you want to build a successful strategy, you need to control the assets. You can't be dependent on the third parties. We are step by step collecting these assets. I mean, for example, for the broadcasting studio right here around this area, you'll see the production studios, you'll see the license, you've got the license, we've got the brand. We are producing the content on our own. So we've got this 24 channels, which we believe is a market differentiator for us. If Cyfrowy Polsat is concerned, actually, you may know or not, but we even have our own factory of set-top boxes, of the devices for the customers. So actually, we are competing with China, and it's not only about price, because probably we could buy it cheaper from China. It's about elasticity. Yes, we can create and develop and change the set-top boxes faster than if we decided to work with Chinese vendors. In case of Polkomtel, it's about the portfolio frequencies, as mentioned, very important topic. We are fully and very well equipped here. We've got our network, 8,000 physical towers existing somewhere around Poland, so that they are providing the signal that you are normally using on your devices. Of course, the contracted customers, this is also the logic between our business, because we believe that at the end of the day, the long-term contracts with our customers is something that provides us with the predictability and stability of the business. That's our focus. In case of IPLA, the same. Yes, we have produced our own platform, we've got our own resources, and that's how we are operating. A fast look about our strategy, maybe the most important topics that should be understood when analyzing Polsat. This may be something that you may not realize, but actually, whenever we speak with somebody from London, from New York, whatever, people are very much surprised that 53% of Poles live in either rural or suburban areas. This is absolutely non-standard. Actually, we are comparable only to Romania, and this demographics is very essential in understanding our strategy, in understanding our success. Because if you look at the next chart, approximately 70% of our customers are living in these areas. This is our core market. This is the market that we are focusing on, and based on that market, we believe we are successful. Well, how to illustrate it? This example shows you actually the development of Cyfrowy Polsat as a satellite platform. Yes, Cyfrowy Polsat was originated in 2003, so I would say relatively late. It was a latecomer, definitely, to the market, and many people believed that there is no space for the next pay TV player back then in 2003, because the market seemed fully saturated. Yes, cable operators have naturally saturated the market. If you look at the development between 2004 2008, you will see that it was actually only Cyfrowy Polsat growing. based on this market niche that I have just described you here, while the others were in the same place. Right now, after this 13 years, we are the biggest pay TV provider, while the others, I mean the cable providers and other DTH platforms, we can claim are exactly in the same position where they were in 2003. Of course, there was some restructuring, some platforms were merging, etc. But generally, their market hasn't grown. While on these customers, we have built the biggest Polish platform. The same philosophy was actually applied in case of mobile services, because if you look at 2010, 2010 is the moment when MIDA started offering LTE services. Yes, actually. Many investors didn't believe that mobile broadband is the winning technology, because naturally, if somebody is living in London, in New York, he doesn't realize that there are so many people living in the areas where you can't have the fixed line access. And the mobile internet that we started providing in 2010, actually right now is taking half of the market already. Definitely Poland is among the countries in Europe with the highest penetration of fixed line internet, slightly lower than Finland, but among the highest countries. On the other hand, later on I will show you where the fixed line infrastructure today is. And the next step that we are currently exploring is about multiplay market. Multiplay understood as combining a set of services under one contract, under one bill, under one point of sale, and under one contact point with the customer service, for example. Which actually, if we are looking at Poland having a penetration of 37% of customers using multiplay services currently versus average 50 for Europe and almost 70-80 for some European countries, our understanding is that actually this 37% was built in the big cities by cable operators. Yes, probably each one of you has a contract with cable operators who's providing you a set of TV, cable, internet, probably mobile services, etc. But the rural customers, so far, actually didn't have this opportunity. And that's our strategy that we started implementing after acquisition of Polkomtel by Cyfrowy Polsat in 2014. SmartDom is actually the brand that we have created for this product. Just to illustrate you how SmartDom concept worked, I will use the very first offer that was implemented in 2014. So the offer was very simple. Provided you were the customer of either Cyfrowy Polsat or Polkomtel with a bill of at least 50 zlotys, so minimum entry point, you could buy the second product with a 50% discount, and the third product priced even for 1 zloty. So actually, it was a killer offer for the customers, because everybody enjoyed these huge discounts. But at the end of the day, it was about defending the value of the initial products as well. So based on that offering, we have built value of our customers that I will show you later on. If we go deeper into, maybe not strategy, but into daily operations, actually what we found after combining these two companies, I mean Cyfrowy Polsat and Polkomtel, this is the number of individual customers, and it's important to highlight here because you may be actually misled by many sources. If we talk about customers, we say about individuals based on their IDs. So these are physical persons or companies. It's not the activation, it's not the SIM card, it's not the smartphone, whatever. In this segment, you will frequently meet the situation that somebody will be claiming that he's got 13 million customers. No, he's providing 30 million services, but he doesn't disclose the number of customers, yes? We are a little bit different here in our disclosures, so it may be challenging for you to compare us to the others, because we start the reporting based on unique customers understood as individuals. And if we aggregate these two customer bases, we found that actually there are over 3 million individuals using services from Cyfrowy Polsat, and almost 4 million customers using contracted mobile services from Polkomtel. The overlap between these two customer bases wasn't significant. So actually, the highest potential that we found back then was not about going into urban customers, was not into eating into another subscribers basis. It was just about cross-selling the products of each party to the other company. So normally, the customer of pay TV would be offered a smartphone from Plus, or vice versa, yes? What we found out after a couple of quarters was actually that selling in this direction, so upselling pay TV to mobile, doesn't really work. The reason is that actually TV or content is about emotions. If you like sports, you won't be convinced by cooking, yes? If you like the brand of TVN, you probably won't welcome the offer from Polsat because the profile of these companies is different, yes, it's natural. So selling a product of cyfrowy Polsat to Polkomtel is challenging for us. Nevertheless, selling mobile devices to these customers goes much easier because at the end of the day, mobile is just about quality, price, and that's all. Every mobile operator on the market provides the same set of services. The only difference can be about branding, about pricing, yes? So if we build an attractively priced offer that may convince the pay TV customers to buy our mobile offering, it means we are successful and the company is growing because we are offering more services. On top of that, we've got a set of various, I would say, additional services. Maybe there's one highlighted pretty insignificantly here, but this is about mobile internet, yes? The mobile internet was upsold to both customer bases. We are, of course, upselling also IPLA. We are upselling CPGO, which is like online extension of our satellite offer to our customers. We are selling insurance, banking, electricity, gas, etc., number of services. But I will say that satellite, mobile, and mobile internet are three key products that we are actually communicating with the market, and they are providing a majority of our revenues. The outcome of the strategy, as disclosed to you, is presented here. We started offering SmartDOM packages in 2014, and actually this number refers to the half year, to the second quarter of 2017. But as of today, there is over 1.5 million of our customers using these packages. So it means that all of them acquired at least one incremental product on top of what he had before. 1.4 million customers means that 25% of our current customer base is already in the program. So we find it as a real success. This demand was really huge. On the other hand, there are still 75% of the customers who haven't entered the product for different reasons. And our strategy is, of course, about convincing them and continuing this strategy because we still see the potential. At the end of the day, as shown on the slide before, if we as Poland reach this 50% of multiplay penetration, it means that we are very successful. The growth in SmartDOM in multiplay product sales, as described, results in a growth of total number of services, contracted services provided by our group. You can see the two-year chart here. So over 2 years, we are selling incremental 1 million products to our customers. Selling products means customers are consuming more services from us, and of course are paying more for that because at the end of the day, we want to build the value of the customer and to convince him to be glad to be paying us more, because at the end of the day, each incremental product is valued attractively for him or her. And another aspect of this strategy is that actually, maybe I should be here mentioning ARPU. ARPU is the abbreviation for average revenue per user, a very, very basic measure for TMT companies. So you will be meeting this across various reports and etc. While churn is the ratio of customers leaving our group. So 8.6% means that over a 12-month period, 8.6% of our customers decided to leave us. What's the most important, as you can see, this strategy results in a decline of churn ratio, which is another aspect. Simply, if customers buy more products from us, at the end of the day, they have less incentive to churn, which at the end of the day results in some cost savings from our side, because naturally this process of retaining customer, offering them new offer is costly and generates some variable costs. So Smart Dome is about building the scale, building the value of customers, and loyalizing them. The tools that we are using actually is the branding. So far, we haven't decided actually to go into a unification of brands for the various reasons. We have been, of course, thinking about that and etc. But actually, right now we are operating under these 4 major brands and some smaller sub-brands that aren't presented here for different reasons. Yes, Polsat, established 25 years ago, is a very well-known brand with very good perception, very good response. We are actually the biggest television in Poland currently, and this brand is like a foundation of the group. Cyfrowy Polsat, with this value for money offering and with a very attractive portfolio of channels for relatively low price, has a very strong Net Promoter Score, which is like the basic measurement of customer satisfaction. Actually, Cyfrowy Polsat is enjoying the highest Net Promoter Score on the Polish market, which again makes us invest in this brand further. Polkomtel has a little bit different history, yes, because this company originally was created by some state-owned companies and some sector players like Vodafone and Tele Denmark. And this company, as mentioned, was about this brand was created about the quality, about reliability, and about new technologies, yes? So actually we found that there is some collision between Plus and Cyfrowy Polsat, but naturally we've got also the customers who are keen to pay for the quality, and based on that the Plus brand recently has been repositioned more as towards B2B segment, business customers, and toward individual needs of individual customers. So these 2 brands are about families and about actually families, while Plus is currently about individuals. And finally, IPLA. IPLA intentionally has its own brand. You know, it's the brand targeted towards young generation. Young generation naturally needs something new, fresh, etc. So we are promoting also IPLA brand. If we go into financials. Actually, maybe I will return to this. Resilient business model is something that we are excelling at. Simply, we are building a business which needs to be predictable, which needs to provide a stable revenue, stable profitability, and based on various optimizations, we are improving our cash generation. Actually, this slide explains you why, yes, as mentioned. 82% of our services are provided in a contracted model. On average, each customer is signing a contract for next 2 years, which gives us a predictability and loyalizes our customers, yes. Based on that, 76% of our services is also contracted. From your point of view, gives you the chance to predict our revenue going forward easier. Only 7% of our revenue is generated from prepaid segment, so the segment that is definitely unloyal and can disappear whatever time the customers decide to. 11% on revenue and some other wholesale revenue, 6% of revenue mix. If this is maybe important, this presentation generally is based on pro forma numbers largely. Pro forma meaning, because you need to understand when you look at our accounts, that based on these transactions of Polkomtel acquisition, Midas acquisition, etc., you will see the revenue stream and the profitability growing for various reasons, which are largely driven by this restructuring. But in order to simplify this picture for the investors, actually we have built pro forma financials 2004 to 2016, just to show that if Polkomtel, Midas, Iplat, Cyfrowy TV Polsat was under one roof, in one group, starting from 2014, actually the top line level is very gradually stably growing, yes? You know, we are rather looking at ourselves as a big ship that is very challenging to accelerate. We don't promise a huge growth. But on the other hand, it's very difficult to stop us from growing as well. We are simply going our strategy. The critical mass has been reached, and we are going further. If we have a top line stable or slightly growing, as presented here, right now it's all about cost control. And naturally, Polsat is known about strict cost control, both in terms of OPEX, operating expenses, as well as in case of capital expenditures. Frequently, we are commented by our investors that Polsat knows how to spend money. So we don't overspend. We don't invest in the initiatives where we don't see a payback period. We are largely focused on the projects that generate incremental value for the customers. And the result, you can see here, yeah? It's all about cash generation for our customers, because cash generation allows us for further new investments, like Netia acquisition, for deleveraging, paying our debts, and for remunerating our investors in the future in terms of dividends. This is one chart. Maybe it will be used by you just for modeling purposes, because, as mentioned, yes, if you want to understand our business, I would suggest first of all look at this pro forma, rather than focus on the reported numbers, because the reported numbers would look absolutely differently and could mislead you. Yes, it actually doesn't make sense to analyze the past, because the group without Midas, without Polkomtel, etc., was absolutely different group. Here you've got the picture of the full group over a 3-year period. And you can see the revenue slightly growing, EBITDA stable. Stable EBITDA in this, especially in telco segment, is something that telecoms are really welcoming. Actually, we've got such expression that stable is our new growth. Because stable, based on further cost optimization, allows us to generate nice cash, and that's all about what we are focused on. Investment, capex to revenue level, and the cash generation. Right now, a couple of words about our competitive position, about our markets and our position in each individual market. That's the slide, that's the chart that actually shows you Cyfrowy Polsat on a pay TV market. Pay TV understood not only as satellite televisions, because satellite televisions are these two blocks, and actually we could claim that we've got over 60% of market share in satellite business currently. It's also about cable operators who are focused on the urban customers, and they took 40 or 45, including IPTV, of the market share. But definitely, Cyfrowy Polsat can claim this is the biggest platform, and this number doesn't change. On the other side, mobile market presented here, you again will find various data on this market. You need to be aware that the reporting standards of various players on the Polish market are very different. So some information may be misleading to you. We are presenting you the slide or the chart that we believe is really reflecting the position of each players based on contracted SIMs. So actually, if I were to describe it, I would say that currently, after 10 years of existence of Play, which was a challenger to the market is in such a situation that we are having 4 comparably sized players. Each of us has roughly one quarter of the market, which is pretty essential to understand, because actually, as of today, none of the operators of these 4 biggest operators has a reason to go into a price war or any repricing of their services in order to win market share, because at the end of the day, whatever price decline will be reflected in the same deficit of revenue in case of each player. So the market has reached a sort of balance, and right now what we are observing, everybody is very much focused to avoid any pricing pressure. because pricing pressure is definitely the biggest challenge for mobile telephony market in Poland. You may not be aware, but again, Poland is frequently quoted as the cheapest market in Europe in terms of mobile services, and that's actually the challenge that each one of us is facing. Television market, as mentioned here, Polsat almost 25%, TVN Group comparable 21% of TVP Group, and some smaller channels. Which is more so maybe important to underline here is that actually the Polish TV broadcasting segment currently is about roughly 200 Polish language channels. So the competition here is huge as well. And definitely there are some players who don't generate positive margins, so the market goes into consolidation. Of course, the politicians want something else, but the economics show that you can't run a successful TV station when your market share is 1% or lower. So we are seeing rather this market consolidating further. Nevertheless, as of 2016, the market looked as here, and TV at market share comparable, slightly higher. So we are monetizing our market shares in viewership a little bit stronger, a little bit better than the average for the market. If the prospects for this each individual market is concerned, maybe I will start from this chart here, bottom left. This is the pay TV market, so the market of Cyfrowy Polsat as a company. And as you can see, we are perceiving this market as a fully saturated already. There is no space for growth anymore. Actually, what we can do in order to grow further is just to upsell our customers with additional channels, so more attractive content, more channels, and based on that to build the value of our customers. But absolutely, we don't assume we can take any more of a market share. Or we can grow our customer base in the future. In case of mobile services, as mentioned, this market is definitely more challenging from the competitive point of view, and also from the regulatory point of view. So this market was more volatile in the past. The chart that is presented here by one of the research agencies is claiming that the market will be growing at a 2.1% compounded annual growth rate. But of course, it assumes that there's no further regulations, no further pricing pressure, simply that the operators are upselling customers with more data, with more enhanced packages, etc. And based on that, the market is expected to grow. But naturally, there are some surprises. For example, like this year, we are facing a regulatory drag from free-of-charge roaming roaming provision. So I would say that this chart may already be outdated. In case of TV market or advertising market, first of all, this is a cyclical market, so naturally it follows the economy, and if the economy is stronger, the results of our TV channels are stronger as well. So a little bit different characteristic. What's important here is that in case of Poland, I think it's also can be connected with the demographics. TV advertising, as you can see here, doesn't lose its market share in total advertising market. This is something which is also very specific for Poland, because, for example, if you talk to Nordics, they are very much surprised that there is still a TV advertising market existing in Poland. As you can see here, TV is very stable. It consumes half of the advertising cake for a number of years, and actually online advertising, this chart here, it is eating into radio, into newspapers, but not into television so far. This chart actually comes from this tomorrow's part of the presentation, but I think it makes sense to show it to you here in this moment, because on this market we are not existent at this moment. We have just bought Netia, so we are entering this market. This is the penetration of fixed line infrastructure, fixed line broadband infrastructure across Europe. As you can see, Poland is definitely among the customers, among the markets with the lowest penetration of fixed line broadband. The reasons for that are many. One of them, I believe, again, would be resulting from the fact that, again, half of the society living in rural areas means that it's relatively expensive to put the cable to the household who is placed somewhere in the middle of nowhere. It's definitely cheaper to connect a block of flats, because you've got one cable and then this distribution to different flats. While if Poland is so much scattered and so many people are living somewhere close to the forest or whatever, yes, it simply is costly to penetrate, get the cable to these customers. On the other hand, the pricing level that is adopted on the Polish telco market means that if the bills are so low as they are in Poland, the operators don't have a positive NPV on connecting many customers, because at the end of the day, the business is hardly profitable, if ever. Naturally, there is a EU plan, so-called European Digital Agenda 2020, which assumes that in 2020, so 3 years from now, each household in Europe, including Poland, of course, is supposed to have a connection of at least 30 megabits per second. And each second household in Europe is supposed to have a connection of at least 100 megabits per second. Whether that's achievable or not in case of Poland, you can estimate on your own. I believe it may be challenging. Nevertheless, you need to remember that Brussels has allocated pretty a lot of money for Poland for supporting these investments, because Brussels understood that Polish telecoms won't do it on their own, because the projects are unprofitable. So you can explore this direction. But definitely this market still is lagging behind Europe, and there is some space to grow going forward. And just to summarize, I would return to this chart, because I was presenting you various markets, etc. Actually, this is the core of our strategy. Yes, we don't look at the individual markets. We are looking at raising the percentage of customers in Poland using multi-play services. So that's something that you should really focus on. Shortly about historical results, just to convince you that the business is doing well and that we are delivering whatever was promised in the past. Again, this is the slide that we normally start with, so presenting the dynamics of smart dome sales, of declining churn, etc. I won't be commenting it deeper. Nevertheless, this is something that we have promised to our investors in 2014, when Polkomtel was acquired by CFA Polsat. These are the levels of aspirations that we have submitted to the investors and our sort of promise to them, yes? So first of all, Polkomtel standalone, being apart from Polsat Group, has really had the problems with retaining customers, because this market is really challenging, and there is one very, very successful player being Play, who has taken a market share among others from us. So our aspiration was just to stabilize our number of RGUs, of services provided by Polkomtel to smartphones, feature phones, etc. As you can see, this decline of the customer base was gradually reduced. Right now, for almost 2 years, we are enjoying a positive net additions. It means each single quarter, the number of services provided by our group in mobile telephony is growing. So we can claim easily that it has been delivered. The aspiration for pay TV was to sustain organic growth. As explained to you, it's not about growing the customer base, but it's about growing the number of services provided to them, because, for example, we can upsell these customers with additional packages, with some additional features like this online extension of our offer, like multi-room service, etc. As you can see, this is also delivered. The third priority was to grow fast in mobile internet, because we back then in 2014 were the only operator that was really able to deliver LTE wireless technology to each pole in Poland. So we have been using this competitive advantage. the customer base of our mobile broadband was growing very dynamically, like almost 150,000 per quarter, which was huge. And right now you see a decline. It is because the market got more competitive. All players have already started providing this service. And we are also looking at this market right now as almost fully saturated. But at the end of the day, if we sum up these three services, you can see that the growth is constantly delivered, and ARPU, average revenue per user, is also growing. Of course, there are some seasonal variations. I mean, for example, in holidays, the people are usually paying more, etc. But if we look on a year-on-year basis, ARPU is in a constant growth, which is one of our assumptions in our strategy. And briefly about TV, Polsat TV. The strategy for our TV channels was to maintain to be in between 23 to 25% of market share, with the focus on the cost control, because this group is always about cost control and about providing the results for relatively lower investments. Yes. As you can see, this chart shows you that the viewership of Polsat over this period was growing. TV ad market share was also growing, so everything was under control and actually delivered. This is, I would say, a very important but also difficult topic. I need to discuss it with you, but I won't give you all answers here because the topic is very complicated. Yes, this is the map of the frequencies that are used by mobile operators. Whatever is green here, it belongs to us. These frequencies, generally you don't need to understand the specifics of each one of them, but generally they are split into two categories. So these lower bands, 800, 900 megahertz, they are so-called coverage bands. So they are used in order to cover full territory of country with the access, which will be of relatively lower quality because it's like a radio line. Yes, if the reach is bigger, then the quality is lower. While these frequencies here, they are called capacity bands. They provide a bigger, higher quality of service, but naturally the access that they are providing is narrower. So it's important for each telecom to be present both here and here. Unless, for example, you are focused on urban customers only, then you can forget this part, then you can just have these frequencies. But naturally, then you won't go into rural areas. What is important here is that these frequencies, this is a scarce resource. So just to give you a hint, this 5 megahertz block, or this 25 megahertz continuous block of frequencies was sold in 2016 for joint value of 7 billion zlotys. Extremely expensive. Actually, many analysts found out that this was the most expensive frequency auction conducted ever in Europe. We have not decided to take part in that just because we believe that the payback period for this frequency is never. So we have taken a step back and actually we are using the block that we have already had in the past. Nevertheless, you need to know that each one of these blocks here has a validity period. It's generally allocated for 15 years for each operator. Right here you will find the dates when the blocks are expiring. And in your evaluations, you definitely need to remember that the renewal of these blocks needs to be incorporated in the models, in the evaluations, because at the end of the day, for example, this block expires in 2022, and naturally we will have to pay a significant amount of money for this block. The most challenging task here is that actually nobody can really well value the value of these blocks, because the benchmarks that you will find from various markets are very different. For example, Finland is offering these frequencies free of charge, because Finland wants to have a society with digital access to everything, and operators are given these frequencies free of charge. Poland, when Polish government saw that these blocks can be sold for 7 billion zlotys, the appetite of the government is naturally huge, and the government will be on the other side of the equation. They will be trying to collect the money from the operators. What's also important here is have a look. This block here expires in 1 year from now, and under the current law, if we decided to renew it for another 15 years, we would have to pay the same amount that the other three have paid in 2016, including some inflation that takes place in the meantime. So actually, we can right now expect that renewing this block in 1 year from now could be priced at around 1.7 billion zlotys. A lot of money, because this is like the amount of money that actually our CEO has made a joke 2 years ago that if we decided to buy one of these blocks, we could, for the same price, buy Netia. Right now we are buying Netia for 2 billion, so for 2 billion. So this is the comparable. Yes, you can see that. Whether you can see the price that we would have to pay for that. Nevertheless, our officially communicated and announced position here is that if the government wants us to pay this almost 2 billion for these blocks next year, we'll take a step back and we will return this. We simply don't believe that this block is valued as much, but we are of course thinking that because we've got another 2 blocks here. These blocks are comparable. What we are currently doing is that we are gradually migrating traffic from this block to these 2 blocks, just in order to be ready to return it to the regulator and conduct our strategy going forward without taking this cost on our balance sheet. Okay, I'm not sure whether it was a little bit too complicated. As mentioned, you will find various benchmarks for pricing of these frequencies on the market, but at the end of the day, you need to be aware that actually nobody knows how much it is worth, how much should be paid. And I would use such an expression that in Poland 3 years ago, the government was prolonging these frequencies free of charge. So the change between the situation 3 years ago and now is dramatic. And I believe personally that it makes more sense to make a sort of sensitivity analysis. What would Polsat have to pay for these frequencies and how would it be reflected in the value of the company, rather than assuming something as a fixed amount, because as mentioned, it will be very, very challenging to find a good valuation for these assets. If our investments are concerned, I mean the regular investments, you can see the amount of money that we are investing in our network, again pro forma with Midas, so you need to be aware that you won't find these numbers in our accounts, because some of this money, especially in 2013 and 14, was paid by Midas companies who wasn't in the group back then, but naturally Midas was investing with the intention to join the group later on. So you can use this pro forma as a sort of run rate investment number for the whole group. Going forward, we are guiding the market for the level of investments of no more than 10% of our revenue stream. If you compare it with the past, it's a rather conservative assumption. Yes, we always prefer to guide the market conservatively and provide some, I would say, elasticity for ourselves. But nevertheless, this benchmark is important for you to forecast the investments that we are supposed to carry in the future. Another chart here. This is the chart disclosing our payments related with frequencies. So actually, they should be looked at together. As you can see, we have been renewing two blocks for a relatively lower amount of money. We are paying also some annual fees to the government for the blocks that we have bought in the past and that they are paid for on an annual basis. Today, actually, this sector, I will here comment briefly the recent results for the third quarter, because normally I wouldn't do that. But if you look at our third quarter results, you would see that they are behaving a little bit differently than in the past. And there's a number of non-recurring or short-term impacts that has been driven this actually declines in our margins. Therefore, it's worth looking at that. I will skip the sections that are presenting something which is like similar to the past trends. Like, for example, in case of TV, here the viewership is very stable and that actually close to 25%, so nothing to comment, yes? In case of advertising market, maybe I should start with that. These slides are presented on a quarterly basis, so you will find it on our website. They are commenting each particular quarter for a couple of years, so you can monitor them. This chart shows you the advertising market, TV advertising market as a total. So you can see that the value of the TV advertising market is slightly growing, as presented further, yes. TV advertising market is not declining, it's still growing. Based on that market, we are growing our revenue as well. So starting from 722 million to 772 million after 2 years. We are presenting here 2-year perspective just because a year ago, in June and July 2016, we had a big event in Poland, actually not in Poland, but in our TV station. It was UEFA Football Cups, which we were broadcasting, and you should perceive it as a one-off factor that has been strongly reflected in our financials, strongly positively reflected in our financials a year ago, which naturally results that right now we are observing a 29% EBITDA decline on a year-on-year basis. If I haven't provided you with this comment, you will see that there's a problem with the profitability not. Actually, this number is pretty unusual because 40% EBITDA margin is definitely unusual for TV stations. We are rather convincing that you should compare 2015 with 2017, remembering that 2016 was pretty unusual for TV stations, for our TV station. If we are looking at the second segment, I mean the services provided to our customers, individual and business ones. Actually, again, the slide, I will skip it because it summarizes our strategy. The number of services provided by us to the customers in a contracted model is, as you can see, in a constant growth. It's growing in mobile, it's growing in pay TV, it's growing in mobile internet, so I would say boring. Something which is worth understanding by you is that actually in the third quarter 17, we are observing a stabilization or even slight decline in our ARPU. So something which is contrary to the performance that we have delivered so far. The reason for that is actually the regulations and the fact that starting from 2017, European customers and especially Polish customers are provided with free of charge roaming, which naturally results that some of our revenue is disappearing. We have provided guidance for this number that actually you should be assuming approximately 100 million zlotys per annum will disappear because of this regulation in terms of revenue. And that's actually, that has been reflected here. So if you model our KPIs going forward, you need to remember that this impact will be with us over next 3 quarters, and later on we should start building our ARPU again. Prepaid segment is a smaller one, definitely less important. There were also some regulatory changes here a year ago. We maybe remember such an act of the operators were forced to register the SIM cards of the customers. So the outcome was that actually within the reporting, it's important, of the telecoms in Poland, roughly 12 million SIM cards, sometimes called customers, disappeared. But it's important to note here that it was absolutely neutral for the market. Simply, customers needed to use their services differently. Right now, what we are observing, the lifetime of the prepaid services is definitely longer, because once the customer is forced to register and to provide the ID to the operator, he's naturally using this SIM card longer. He doesn't buy another one just for different reasons. So this decline shouldn't be worrying for you. Simply the market has changed a lot, and you will observe everywhere. The other part of the story is that the ARPU is growing 8%, which is huge. And it isn't about pricing changes or whatever, it's just about changing the lifetime of the customers, so side effect. If we look at the financials of our group for the third quarter, revenue is stable. If we take into consideration that we have this one-off base effect from football event a year ago, and if we have this regulation in roaming, so stable is a very, very good result here. But EBITDA, the most important measure of operating performance in each TMT company, is under 11% decline. Definitely, we have never observed such a strong decline, so it needs commenting. And the comment is here. The EBITDA between third quarter 16 and third quarter 17 has declined by 106 million zlotys. Out of that, 69 million is allocated to the service of providing services, and out of that, 62 million refers to roaming regulations. So something that will be with us inevitably in upcoming quarters, but starting from mid-2018 should be disappearing. And then in terms of TV broadcasting, this is this one-off effect of unusual 2016 because of football. I don't know whether you are interested in that, in explaining the dynamics of roaming. But generally, the situation here is that Poland as a country is we call it net exporter of tourism. So more Poles are traveling abroad than foreigners coming to Poland, which means that if such regulations come that operators are forced to provide roaming services actually free of charge, it means that actually the volume of the traffic of our customers who are traveling to Greece, to Germany, to France, to Spain, to UK, whatever, is growing, and we, as the operators, we need to pay for that, because naturally we don't have the networks there. The networks are existing in these countries, but we need to buy them this capacity, and that's the reason actually for this EBITDA decline. Going forward, again, we are right now in the process of renegotiating our roaming deals, and we are hoping to diminish this strong negative effect in next quarters. This is the chart that we are also showing regularly on a quarterly basis. I won't go here into detail, but I just want to highlight it to you, because if you will do a DCF valuation of the company, I think it's pretty important for you to understand how we are generating money and why sometimes the cash generation provided by our group is either higher or lower. So on a quarterly basis, we are commenting why, for example, in this particular quarter, the cash generation was relatively low. There's a number of reasons. I won't go into them, but I believe these charts may be important for you in evaluating our company. Another part of the story is that the philosophy of Mr. Solarz as the investor in Polsat was actually always about building the company based on own resources and also based on own cash. The situation has changed on the acquisition of Polkomtel, because Polkomtel was actually much bigger than Polsat Group prior to this acquisition, and naturally Polsat wasn't able to finance Polkomtel acquisition based on own cash resources. So there was pretty significant debt taken on acquisition of Polkomtel, and as of today, as of September 2017, we still have on our balance sheet 11.4 billion of debt. We are a leveraged company, and you need to take it into consideration, because it also generates a significant recurring costs. Yes. What's important here is that, first of all, after a series of refinancings, today all of this debt is 100% Polish zloty denominated, so you don't have a forex exposure anymore. you won't see the volatility in our interest costs. Secondly, this debt that we have is relatively cheap right now, because the blended interest cost on this debt is only 3.4%, including WIBOR. So we perceive that we have reached the bottom. We can't expect more from the banks. The banks are offering it really cheaply to us. And this chart is important for you just to assume the amortization of the debt, like the scale of the repayments that we are supposed to deliver in the future. If the pricing is concerned, it's also important for you. The pricing is dependent on our leverage ratio. Leverage understood as net debt to EBITDA. So if we are reducing the volume of our debt on a balance sheet, the debt becomes cheaper. Naturally, if something may be cheaper for us, we are looking to optimize, and we are looking into going lower on the scale, so just to provide a higher free cash flow to our investors. And here we go smoothly to our financial policy. The financial policy has been formulated a year ago. The main goal is to deleverage the company to the level of below 1.70 times net debt to EBITDA. As presented earlier, we are right now at the level of 2.83, so it requires a couple of years from now. What is important, we are honest with our investors, and we are guiding them that unless the company is deleveraged to this level, which is satisfactory for us, they shouldn't be expecting high dividends. We are explaining to them that it makes sense to deleverage the company, that it gives us flexibility, that it reduces the interest cost, so that they also see some benefits on their side, because the company is getting more valuable. Nevertheless, the dividend policy is like the secondary priority for us. And actually, with this Netia transaction right now, I would say it's the third priority, because the potential for the development and investment always comes as the very first priority. Maybe this is less relevant. Let's focus on this one. This is actually a very clear dividend policy that we have also submitted a year ago. So as you can see, it's all dependent on our leverage. If the balance sheet is improved and the leverage declines, then the investors can expect a higher payoff. Right now we are at 2.8. So in 2017 we have paid 205 million of the dividends. And actually that's the guidance for you. Don't be too generous in case of dividends until we are at the level of below 1.75. And another aspect, the valuations based on dividends, in our case, don't work, because that's just the policy of the company. Yes, we do not decide to pay honest dividends to our investors, and the investors may either accept it or not. And about tomorrow, yes, the transactions that we have announced a week ago. First of all, smaller transaction. We have bought 7 new TV stations that are being added to our portfolio. 5 of them are music related. Two of them, this one is more about education, this one is about general information, etc. The price for these stations is 103 million zlotys, as disclosed here. Based on that, we are buying three companies. 2 of them are fully bought. I mean, SK TV with these channels, Lemon TV with these channels, and TV Spectrum, which is the owner of these 2 channels, will be in our hands. 49% of this company will be in our hands. This amount, 103 million, is the total payment for this transaction. And based on that transaction, we believe that we can simply extract more value from these companies, because these companies were in the hands of the individual who has just declared that being smaller on this market, he can't expect the pricing in these channels and the cost synergies to be as high as Polsat can do. So actually the deal is constructed in the way that the former owner of this channel and the people that are working there, they are still managing these channels. There are no changes in the profile or in the branding or in the resources of these channels. But actually Polsat is taking active role in selling this capacity, I mean advertising these channels, because we believe we can monetize it better. And naturally we are looking for some synergies in content, in technical aspects, etc. Just based on these initiatives we expect we will generate 15 million zlotys per annum of incremental synergies. And this bigger transaction that generally takes definitely it's more interesting for the market. It's about Netia acquisition, as mentioned. Second biggest Polish fixed line infrastructure. So far we haven't decided to go into fixed line, but right now we took a decision that is the right time to go into this market as well, because we believe this is simply the next product that we can offer to our customers. Yes, we don't look here about the voice connections because this business is declining anyway. Yes, you won't sell the fixed line voice connections to the customers. They don't want it anymore. But fixed line broadband, especially of a higher quality, is something that customers may be willing to have, and our strategy is just to expand our portfolio of products. But actually there are also other reasons why we have decided to go into Netia acquisitions, and they are presented here. Yeah? First of all, it's about the infrastructure, because telco business requires heavy investments in infrastructure, and actually there's a lot of physical installations from us existing over the country. So Netia has a set of assets that I will show you later that we believe largely strengthens our assets on one hand and gives us the potential to think strategically about further development. Later on, it's about customer base, because right now in Netia there is almost 1 million individual customers and 25,000 business customers. Customers are always valuable, so it makes sense to pay for them. And thirdly, completely new market, which is urban market. I will go step by step by these topics. This slide is about infrastructure. Yes, these are the assets belonging to Netia, which we believe they can be like compared to highways. So the highways for data. Yes, these are the pipes that are connecting different cities and different locations. And these are the pipes that actually are transferring the data from each of you to another party. At the end of the day, the number of data, number of information that we are sending for our customers is growing very dramatically, and all forecasts that you will see will confirm that the future. Maybe I will use another example. In case of voice connections, we could hope that the one day has just 24 hours and customer can't speak more than 24 hours excluding the night. Yes, that's the limit. In case of data, there is no limit, and actually it doesn't exist. Customers are using more, they want more speed, they are sending more data, and actually we need to be ready to transfer this. And that's about this highway network that we bought with Netia. It's simply the infrastructure crucial for future development. On top of that, Netia is existing in 48 biggest urban markets. I mean Warsaw, Wrocław, Gdańsk, Poznań, etc. This is the area where we aren't strong. It's not the area of our core interest so far. So we believe that if Netia is already existing, it's almost 50 cities, it's valuable for us because we can build a national-wide marketing campaign. If we decided, for example, to build a network in Warsaw, we would have to do a local advertising campaign, which is pretty unusual for us, yes, because we've got a TV station. TV station is reaching every pole definitely it works better for us to build a massive campaign and to promote these services all over the Poland. And thirdly, Netia is currently reaching 2.5 million households, individual locations. So it's not the number of services, it's now the number of the cables existing in the flats that are already connected, not necessarily sold. Actually, the sellout ratio on these 2.5 million is right now around 20%, so relatively low. We believe we can do it better with our sales force, and we can sell more than Netia on its own. Customers, actually, this map shows you in how many cities Netia is already present. Yes, 1 million customers, 25,000 B2B customers. What's also important, Netia has the access network. I mean, this last mile, this connection to the real customer at the end of the day. So this plug in the wall, already existing in 70% of major office buildings in Poland. So if we decide to create an offer for B2B customer, right now with Netia, we have already our infrastructure there existence. It allows us to offer this new package for B2B customer cheaper because the investment is already done. And thirdly, new market. Naturally, we have grown from these rural and suburban areas. Our reach is including the big cities and agglomerations so far because, for example, Polkomtel, of course, delivers its services all over Poland, and the satellite television is also accessible everywhere. But at the end of the day, you may, for example, have a wrong direction of your window in your flat. Yes, if it's on the wrong side of the building, you won't install the dish because it requires that different direction. Your neighbors may not necessarily like the satellite dish on your wall because the office is new and the building is new, and they don't want to have something like that on the wall. So there are many limits, especially for satellite television in urban cities. On the other hand, Netia, with this 2.5 million accesses, naturally has focused on the big cities only, and that was the addressable market so far. So we believe that Netia opens a new market for us, and this is another reason for going into this acquisition. The slide that has been presented earlier, so nothing new, but we have added here Netia just to explain you that in the past, Netia business model was not only about own assets. They have also provided their services based on the infrastructure of third parties, and I would say that in the recent period they have realized that is the wrong way. That at the end of the day, if you want to have a good offer and flexibility in pricing, you need to have your own infrastructure. So what Netia is doing right now is trying to migrate their own customers onto own infrastructure just to improve the margins, and also to have a more flexibility, and we are definitely supporting this direction. So maybe as of today, this work isn't fully done. I mean, Netia is still using some third parties assets, but we believe we will change it going forward. And this is like the competitive positioning of our company versus our major rivals on the market. And so you can see the closest, the operator that has the offer currently being closest to ours is definitely Orange. But there is one missing puzzle, which is content. Content is frequently underestimated by some analysts, especially those who are working with telcos who don't believe in content. But we as a company, we have grown from content, and we very hardly believe in content. And just one example for you that may be important for 2018 and going forward. This year we have decided to pay a hefty price for Champions League football content, because we believe there is a group of customers on the market here in this company who are with them just because of football. if this football comes to us in 1 year from now, naturally we are expecting that some customers will follow because about the emotions, yes? If you like Champions League, you don't mind whether it's Polsat or NC+. You want to watch Champions League, yes? You won't replace it with volleyball or hockey. And this is our strategy, yes, that we are building this content portfolio and actually the control over the content, and it is us deciding whether we will sell this Champions League to the other players or not. We are flexible here. We can decide that this offer is only exclusively for Polsat customers, and based on that we can expect that some of them will come to us. As mentioned, this content wasn't cheap. It was relatively expensive. You will probably find some valuations for that, but we believe it's a good direction, given especially we are going right now into this urban market where the pockets of the customers are bigger, and they can afford paying for premium content like for example football. Some details on the technical aspect of the acquisition. So far, we have bought 32% stake in Netia for 640 million zlotys, implying the enterprise value of 2.2 billion zlotys. All right, a day after, we have announced a tender offer for another 33 or 34%. Actually, we are aiming to achieve 66% control over this company. What is important here is that in the meantime we've got the anti-monopoly, antitrust office, Polish Office of Urząd Ochrony Konkurenta i Konkurencji, tak? So right now the second stage of the transactions is dependent upon the timing of the regulator. If the regulator sees the risks that Polsat becomes too strong, then the second stage might be delayed. If they understand our strategy and believe that we want to go into this new market and actually invest in Netia and create a new player on the urban market, then this transaction should be going smoothly. Of course, we don't control it. We believe in a second scenario because these markets aren't overlapping. We are going into new territory with our cash and our plan for investments. So we believe there is a lot of rationale for the anti-monopoly office to allow us to buy Netia. But at the end of the day, it's not controlled by us. The pricing of the valuations that we have done, I don't know whether we are interested, but generally, if we are buying any company, we are doing a job pretty comparable to yours. So we are doing our DCF, we are comparing it with other comparable companies from the listed companies. We are comparing it to different transactions. So we believe the price that we have paid for Netia is relatively attractive, relatively good based on these valuations. Nevertheless, it was strongly above the current market cap of Netia. So there are different opinions on the market on that transaction, I would say. One of the reasons why we are going into acquisition of Netia is naturally synergies. Yes, so we simply believe that together we can do more and we can extract more value. These synergies has been estimated cumulatively over five-year period in 800 million zlotys. Major part of this synergy is into EBITDA. So actually, it's about a better selling of the products. It's about better distribution networks of ours. Because, just to give you an example, Polsat being Cyfrowy and Polkomtel jointly, we currently have around 1.1 thousand points of sales distributed across Poland. Netia has only 43. So it shows you how stronger our sales force is and how bigger capacity we have to offer these products. Yes, but it's also about B2B customers. Yes, we believe that together we can sell it better. On the OPEX side is just a number of initiatives that normally are implemented when two companies of comparable profiles are combined. And of course, we are also seeing some synergies in CapEx. Simply, mainly it's about the scale, because our investments in telco is roughly 4 times higher than the one of Netia, so we believe we can improve the pricing for Netia. We can believe that based on these highways that we have presented to you, some of our investments in mobile technologies can be done cheaper, and that's about it. This slide is actually about this tender offer that we have announced. Maybe it's less relevant for you unless you have the shares from Netia on your own or you want to, so I will skip it right now. But this is important also again because actually this is the only set of data that helps you to look at this combined company after the transaction is concluded. Yes, so you can see this difference in the scale of current or yesterday's Polsat versus Netia. Jointly, our revenue would be above 11 billion zlotys. You can see the difference in EBITDA in this operational result, again 10 times higher. You can see the margins. The margins generated by Polsat companies is definitely higher than the one by Netia. So we will be working naturally at the profitability of this company. You can look at the investments, and here you can see Netia. They have a fixed line business model, which naturally requires definitely more investments than the mobile business and TV as well. So the capex intensity of Netia is definitely higher, and our role is just to strengthen the balance sheet of Netia and to give them the boost for further development. And net debt, unlike Polsat, Netia has a relatively insignificant debt level, so actually combining these two assets improve our balance sheet a bit. I don't know whether you want to go detailing into Netia or not. Maybe it will be valuable for you because at the end of the day you need to value it as well and then to the company. Yes. So as mentioned, this is about the infrastructure, the current infrastructure. It's important that Netia currently is already investing into a network and trying to upgrade it to fiber technology. And the budget for that has been provided by current Netia management board. We, as the company, we fully support this strategy, and we believe it makes sense to upgrade the Netia's infrastructure and to provide a better quality service to the customers. Customer base has been commented, financials have been commented. Slightly about the portfolio, about current customers of Netia, or actually the business model, yes, because this is a little bit different than the one of Polsat. Polsat is about, as mentioned, about families, about individuals, and about rural areas, yes. Netia, as you can see, half of the business comes from B2B market, from corporates, and 66% of the margins comes from B2B market. So the profile is different. Actually, I would say that the current exposure of Netia on our core market being B2C is relatively limited. We have simply the space to improve it, rather, because so far they weren't very active on that market. Another aspect that may be important for you a little bit later, but that shows you, yes, the number of services provided by Netia based on own infrastructure versus the services provided based on infrastructure of other players, being Orange Polska and Play Mobile. As you can see, Netia is right now taking this direction that we really support, that the services should be provided based on own infrastructure, while the customers from regulated or third-party infrastructure are migrated to this customer base. And we believe it makes sense. And right now, I think the most boring part, but maybe really important for you, just to provide you with a few comments about our way of presenting the company, about how our financials look like. I don't want to go into detail here, but into the numbers. I just want to highlight you a few topics that you should pay attention to if you want to understand the company. So first of all, we are pretty unusual in our reporting of our KPIs because we have decided to go into this customer as described. It's about individual, it's not about service, it's not about SIM card, it's not about smartphone, it's about person who is upsold with RGUs, and RGU is actually comparable to service, yes? In terms of telco, it's a SIM card. In terms of DTH, it's either a satellite dish or online access to the television. But generally, if you want to benchmark us versus our peers, which is pretty natural for you, I believe, you need to look about revenue generating units, and assuming that this is the one that is comparable to our peers, because as mentioned, none of our direct competitors, apart from cable operators, provide any information on their actual customer base. Secondly, the ARPU that I have presented to you, it's also different versus the market standards because we are calculating ARPU per customer, which is twice higher than the numbers you will see from our peers, just because they are presenting the ARPU per service. It's intentional. We want to show you that we are building the value of customer, and if at the end of the day the third or fourth product bought by this customer is valued one zloty, we are still happy with that. Naturally, it dilutes the ARPU per customer, but the total bill that the customer is paying to us, total portfolio of services that we are providing to him, is expanding, and that's the goal. Churn ratio have been commented earlier. Maybe also a short word about this prepaid market, yes, because this market is very blurred, and actually you will see different disclosures from different players. I would say that there was a lot of mess in the Polish market, and generally we are disclosing our detailed definition, which is non-standard. First of all, we wanted to show that our business is really about contract, and we believe that's the future. Actually, I would say that 3 years ago I was discussing with one of the S&P analysts, of Standard & Poor's analysts, who commented to me that Poland is a prepaid dominated market. And I thought, what the hell? Absolutely not. But this is the perception that the Polish companies have built, which is fake. But for some reasons, the telecoms have built such a perception. We tried to be closer to reality, so we have applied a different definition, which results in no lower number of prepaid services provided, but higher ARPU. It's only about mathematics. This is the standard KPIs that we are reporting on a quarterly basis. As you can see, you will see there the number of customers, ARPU per customer, the number of RGUs or services provided in these three categories: pay TV, mobile telephone, internet. Churn per customer, the ratio which is declining. And another important measure which is a RGU saturation per one customer, which is simply the average number of services used by each of our customers. As you can see, it has gone up from 2.01 to 2.34, and we believe it can go further. One important comment here that I should add, that's normally not disclosed in our slides, but may raise your questions. If you look at the number of customers, it's in a decline. If we are doing like IR activities and you know this presentation, naturally nobody wants to show that the number of customers is declining. Yes, so we are showing these measurements as presented to you. Nevertheless, we don't hide that this number is declining, and you need to be aware that this is because of two reasons. First of all, about competition. So there are, we can admit, successful players especially on the mobile market, who are providing a very good growth, and some customers are migrating to them. Our strategy, if we have gone into this multi-play strategy, means that we avoid repricing single-play products. We are relatively conservative on a single-play product because we don't see value in reducing the prices. It's not our strategy. Nevertheless, some customers who are very much price sensitive and they are just interested in one single SIM card with number of voice connections, we actually let him go. Yes, he doesn't suit to our profile. But the other, maybe less obvious factor is that The strategy that we have implemented, the strategy of building multiple services, results in the fact that, for example, if me personally and my wife, we have 2 SIM cards in Plus, under this strategy it makes sense to terminate the contract of my wife and to migrate this contract onto me, because the combination gives a better price. The outcome in our disclosure is that actually we will still have 2 services, so nothing has changed, but 1 customer less. This is just the purely mathematical side effect of this strategy, which we are commenting to the investors and explaining that you should be expecting that. At the end of the day, it's important to have my kit with the 3rd SIM card buying from us, so that we have 1 less customer, but 1 additional service in our family. Yes. Profit and loss account. I think there's nothing particular that should be commented here, because the disclosures are pretty clear, but I will go briefly by them. Retail revenue is about the bills of our customers. Yes, that's actually what the customers are paying. Under some pressure, which is simply driven by the fact that the prices on the Polish market are declining, so we are facing this challenge. Wholesale revenue is about advertising. So these are all contracts concluded between operators, telco operators, all contracts concluded between Polsat as a TV advertising provider with advertisers, etc. And here the trend is positive. Sale of equipment is actually the payment that our customers are carrying for the devices like smartphones bought in our points of sales. So this is growing. This is simply the function of actually the improving the disposable income of Poles. Yes, they want the nicer smartphones, they want nicer devices, and they are really willing to buy them. Other revenues like less important. Then we've got content costs. Content cost, this is actually about these movies, sports, channels, etc. provided to our customers. So if I may guide you something, you should be assuming that we will be investing in content going forward, because we believe in this strategy, and for example this UEFA, it will be reflected in our costs going forward. So I wouldn't be guiding you to assume some cost savings in this category going forward. Distribution, marketing, customer relations management, etc. So there is a lot of like advertising campaigns or commissions paid to our sales forces, etc. Here, roughly speaking, we don't conduct any major cost savings, because actually we are developing this business. We don't go into reducing our business. Depreciation and amortization is obvious. Technical costs. Technical costs, as you can see right now, it's the biggest cost category in our P&L, so very important. This is about maintenance of our infrastructure, which is very extensive but also very costly. And for example, Netia acquisition is intended to, of course, to allow us to find some optimizations here. We may be looking for some reductions in our infrastructure, so eliminating some overlaps, etc., just to provide the services cheaper. But technical costs are also about the settlements with our telecom partners. I mean, both the local operators that we are operating here in Poland, because every connection that is done between, for example, Plus and T-Mobile generates some costs. We need to pay T-Mobile for using their network, and vice versa. So there are various settlements. This is about roaming. So this purchase of the traffic on the networks of our foreign partners, etc. And actually that's it. Then we've got salaries, which is obvious. Cost of equipment. This is the line that is directly linked with this sales of equipment revenue. Yes, so we are always ready to provide our customer with a new device if he is interested, and if this cost category grows, it simply means that we have sold something, which is a success. Bad debt, this is about bad payers, yes, people about who don't pay timely their bills. And other administrative G&A costs, nothing particular. Bottom line is pretty obvious for the standard for each company. In terms of balance sheet, one of the mistakes that the analysts or the brokers are doing while valuing our company is that they implemented this general rule of thumb that in the terminal value, the investments should be equal to amortization. Yes, this is, I would say, the general rule that has been told to me, at least in the studies, and I frequently hear it from the various investments. Was important. If we have bought Polkom, Telmidas, and TV in the past, there are two lines, customer relationships, brands. These two lines, they don't need to be, they are first of all intangible, and they will be amortized going forward. We won't buy again Plus brand, or we won't buy a TV Polsat brand. So you don't need to assume in your models that capex should be reflected should be comparable to the depreciation and amortization level. Then we've got something we just called here other intangible assets, but this cost category is about frequencies. So as you can see, 3.3 billion zlotys value of the frequencies, they will be amortized. And in the certain period of time, you will have to assume that we will buying them again, yes? So this asset will be valued higher again. And actually, the rest is pretty simple, I would say. Maybe it's current programming assets and non-current programming assets. Non-current programming assets. These two lines it's about content, yes? Actually, as you can see here, 181 plus 244, it means that actually our inventory of content for upcoming quarters is really full, because this is the highest number ever, which means simply that we are preparing a very attractive offer for our customers for 2018, including, for example, this football, yes? You should look at this as an inventory of intangible assets that at the end of the day will be monetized in our TV stations, in our pay TV television. If on the equity and liabilities side, I think there is nothing unusual here. As you can see, the equity goes up, the liabilities go down. So we are deleveraging. I think most of the categories here are pretty obvious. You may see some, flows between current and non-current assets, like in 2015, is simply about our refinancing tasks that we have done in the past. We have in the past probably 2 or 3 times fully repaid our debt and drawn a new one. So this fluctuation will be visible. It's irrelevant for you right now, I believe. Cash flow, pretty complicated. Many cost categories because of different composition of the business. Actually, that's why we are using very, very loudly this FCF measurements, which we believe is pretty important because it shows you the recurring cash generation, regardless of different transactions that are done in the meantime, etc. But if I want to pay your attention to something that is maybe unusual, there is one category, net additions of reception equipment provided under operating lease. So in the Polish pay TV market, customers who are receiving a satellite dish or set-top box from us, they don't know it. They don't own it. It's our ownership. They are leasing it. And this line here is reflecting the money that we are investing into replacing these set-top boxes of our customers. Unlike, for example, smartphone. Yes, customers who are buying smartphone is their own smartphone, and you will see it directly expensed. In investing capacity, investment. Sorry, something is wrong with that. in investment activities, you will see regular capex, regular intangible assets, so mostly IT related. Then there's a payments for telco frequencies line. So it has been commented earlier. Later on, we've got the acquisitions. So acquisitions net of cash. This position here means that Polkomtel in 2014 was acquired with a huge balance of cash. But of course, these are non-recurring, so less relevant for you. And actually, I think that's it. If you have any questions, you can still email me, contact me, or whatever source the CFA organization is guaranteed.
Thank you very much. This was very comprehensive presentation. I think there's still time for some questions if you like. You can, of course, gather all the questions for this follow-up communication, but I think maybe you have some now. This was very informative. Even I understood this. So
we try to make it simple, but you know the company is growing so fast.
I should recall that one of the companies that was subject of the previous competition, which was in 2014, I believe, was Netia actually.
Yeah.
So Netia was being valued and actually evaluated and valued by students, and I have to tell that our students, and I think this year will be the same, always last 6 years, if I correctly remember, this is our 9th. So our last 6 years, teams from Poland already get to the by strict I mean last 5 teams in the EMEA final. So they're competing for the winning of EMEA final, and in 2013, one team from Wrocław won global final. So actually, you have to follow this rule. Actually, I think so. Be on the EMEA final at least. I think maybe global final. Okay, so questions and answers. I think.
You're welcome.
Okay.
Long-term trends? I mean, not in several years, but in like 10 years. Do you perceive on the multimedia market? How would you like to make the strategies to these trends?
As mentioned, you know, in our customer base, only 25% of our customers so far are enjoying the benefits of multiplay. So we believe that the space for growth in this rural suburban market where these products weren't offered so far is really huge for us. And actually, if we are measuring our performance in this upsell ratio, meaning the ratio of services per one customer, it doesn't slow down. It still grows on a very smooth linear trend over these recent 4 years. And even though some, for example, the growth in our smart dome base is slowing a little bit, which is natural after 4 years, even those customers who are already in smart dome, they sometimes, or pretty frequently, buy another services on top of that what they have before. So naturally, you know, the families are growing, the demand for the services is growing. So it's hard to set a limit right now for myself, at least for mid-term perspective, because we don't have evidence that the prospects for the market would be declining.
Okay, other question? Yes.
The debt repayment schedule states that CFA reports that is to pay around 7.5 billion zlotys in the year 2020 for combined term facility. And the question is as follows: is CFA report going to somehow renegotiate that huge repayment in 1 year, maybe to make it a bit longer or something like that?
Definitely. Actually, I would say together with the Netia acquisition, almost immediately we started discussing with the banks, because from the bank's perspective, I would say 2 years ago we have done a business with them valued 13.5 billion zlotys. Right now, after 2 years, 2 billion has already been repaid. So the cake that we are providing to the banks is shrinking very fast. So Netia acquisition for them means that they have a potential to cooperate with us further, because naturally we need some support from the banks. So the discussions with the banks have already been started a week ago, just directly after Netia acquisition. But you know, as of today, it's hard to comment what will be the outcome. Generally, our general approach is that we don't believe that the pricing that has been gained by us in 2015 can be improved. It's already so low that we don't have an appetite for going deeper down, especially that the financial markets right now are rather expecting the interest rates to go up, so the climate is reversed. So we will be happy to have it prolonged, but rather what we will be working with the banks on is to improve our flexibility. Because, for example, in case of Netia, our current financing documents have been limiting our appetite for acquisitions, and actually we could buy the companies valued jointly no more than 1 billion zlotys, which means that Netia already fully utilizes this basket. That's why we right now need to go to the banks and talk about actually making our deal, our senior facilities agreement more flexible. So you may expect that naturally this maturity wall, as it's called usually, will be moved further, will be backloaded. Maybe the payments will be adjusted. And actually, we don't see a problem with that. But first of all, what I want to highlight: don't assume any further pricing reduction in the banking facilities.
You have mentioned a lot of information about Smart Home service line, right?
Yep.
But there's also Smart Firma,
yep.
And it consists of 6 products, right?
Yes.
Right now. Can you evaluate something more about Smart Firma, and maybe do you consider to introduce new products to this service?
Actually, Smart Firma, because Smart Firma is the product aimed at small business, at the individuals who are having the companies composed of 1 to 5 individuals. So this is relatively like very small entrepreneurs. And this product hasn't been selling as well as Smart Dome. So as of today, actually, our strategy doesn't focus on this market, and I don't have any guidance for what we'll do going further. We are rather strong in a big corporates, which was a legacy market for Polkomtel, and still in this 9 billion of group revenue, 1 billion roughly comes from B2B segment, which we don't highlight here because the presentation would be even more complicated. But we are definitely stronger on a corporate segment, and in this market, Netia acquisition is improving our negotiating positions because naturally we are merging the assets and we can build a better portfolio for our customers. While small office and home office market, the smaller companies, is not our core market today.
Okay, I can't see the other questions. Let me say that, oh yeah, there is a question.
Given the fact that you currently have a really strong cash flow, do you see any threats for this tendency to keep going, and if yes, why?
Actually, we have a little bit revised our guidance for free cash flow for this year. We are right now guiding for approximately 1.5 million, and there are actually 2 reasons for that. First of all, we have decided to go into this Champions League project, which required some upfront payment from us, which have been done in the third quarter. So this is one of the reasons why this free cash flow was lower. It's just like building a library and prepayment for UEFA. And the secondary fact is that actually, as mentioned, Poles are right now very much interested into higher-end devices. And the nature of Poles is that actually they like buying them in installments. Buying them in installments means that actually we are crediting our customers. We are providing them with a credit for these devices. And this means that our receivables from customers are growing pretty dynamically. And of course, we haven't such a strong free cash flow, we would probably looking for some solutions for that. But given our cash generation is really strong, we have decided that we will be extending portfolio and offer for the customers because our balance sheet allows for that.
What happened between 2014 and 2015? Because there were 4 times more in net income in 2015 than in 2014.
Could be, first of all, side effects of, because until 2015 we have had high yield bonds denominated in euros and dollars. So actually each single change in the value of Polish zloty was reflected heavily in our bottom line just by revaluation of these bonds. Secondly, the refinancing task has also resulted in many one-off positions. For example, there was a discrepancy between the balance sheet value of these notes and their nominal value. Of course, we were repaying nominal value, which means that there was paper profit recognized in our bottom line. Actually, from the perspective of the company and operations, I would rather focus much more about EBITDA than the net profit, because the net profit is definitely less relevant for the sector.
One more question. Is Netia's original CapEx plan, CapEx schedule, the expectations on CapEx fits CFA reported business model or not? Will you make some changes?
This is actually another complication for you, because by our decision, maybe I will tell you this way. There is one deal right now pending on the Polish market between UPC and Multimedia. This deal is already investigated by the Polish Anti-Monopoly Office for 12 months, and the conclusion is not clear. Yes, so given we don't have a certainty how long the office will analyze our case, we have decided that as of today, until we take a control over Netia and until we are sure that we are allowed to buy this company, we won't be disclosing our midterm strategy, especially the one that you have asked, just because it may prove at the end of the day, in a very negative scenario, that if this analysis of anti-monopoly office is long, we'd actually put our cards on the table, and naturally our competitors are looking at us. So sorry for that, but I can't answer. The only guidance that we have given is that we are supporting what Netia has already started, and we believe this project definitely makes sense.
Okay, so I think there are no more questions. I would like to thank you very much again for all your help, and some housekeeping things maybe. First of all, the presentation plus my presentation at the very beginning, plus official rules, just to make a clear statement, will be sent to you, of course. My great thanks goes to, I forgot to say at the very beginning, to Jakub Jański. Jakub is not here, but Jakub is the administrative officer, and some of you already contacted mostly through Jakub. That's the other thing. Also, within few days, I think 1 week or so, we would assign mentors to each team. The important thing is that registration. So those teams who didn't register yet, for the reason that they enter in the very, very last moment, like yesterday, for example, please do it immediately, because we have to get a confirmation from CFA Institute that actually the number of teams, the number of universities is 25. If this is true, which I think could happen in the next 2-3 days after all registrations, then 2 teams from our local final will go to the EMEA final, which is good news. But again, we have to get the official confirmation from CFA Institute, of course. I think that's fine for today. Thank you for coming.
I would also like to add that I'm really I'm happy to be joining this project with you, and it was my pleasure to present the company to you. I hope that I have explained some of the priorities and some of the strategic directions that we are heading, and giving you the background why the strategy looks like that and not differently, which sometimes is not understood by the investors community. And I'm looking forward to your questions. If only I can answer them, we'll be happy to support you.
Yeah, please remember, according to official rules, there is 1 follow-up communication, so don't send questions, just except for this one. And I think that when we decide actually, and there was a shot which company should be taken as subject company, that was like several months ago. We didn't actually expect maybe to the very last end that it will be so nice story about this. Company has story. This is important for those teams, especially who are going to the EMEA final, then to present nice story. because those judges there, they don't know particularly about Polish market so much. So the story is very important, but also I understand that this is a big challenge also for you. You have 2 months to go for the reports. Don't work during Christmas Eve and during Christmas Day and during New Year's Day and during New Year's Eve day, but please before Christmas just make a strategy preparing this report. Thank you very much. Thank you for coming.
Dziękuję bardzo.
Świetnie pan to przedstawił, bo to bardzo było takie komprehensywne.